And we are live. Okay, here we go. So, hello everyone. We have the topic of, well, at time of recording, evening, being contingent liabilities. So, it wouldn't be a negative two accountants, one gap live stream without a cringe-worthy Google sheet, which won't really have that much. Swear to God. Uh, contingent liabilities. So, broadly speaking, the ones that people really care about come in two flavors. One would be product warranties, most common. We're not going to talk about that. Should be relatively straightforward. Like you purchase something, you have like protection with it. Sort of like product insurance, more or less. And company distributor, someone has to replace it. You have a lot. The company, whoever's providing that warranty, has a liability matched to a product. It's contingent upon an event happening. Lawsuits, on the other hand, and this one, the whole purpose of this again is to try and provide at least some value to people that may not know. Lawsuits would be one of those things where it happens quite frequently, especially at time of recording in the good old U.S. of A, where I'm been born and raised and have spent most of my life in. We're litigious people. We've had quite a fair amount of it. So in the case of lawsuits, how do you as a person looking at financial statements see them and process them? And I'll hint a little bit about the pure accounting side, but uh, you know, uh, this is one of those things where like I can at least provide a recent undergraduate academic perspective, whereas Andrew, who is both certified and professional, can give you a more up to date perspective. So maybe this will become a topic that the two of us tackle together. But I figure, I can at least give you what I know, and not everybody necessarily knows what even I know, which may not be much. But here we go. Let's get to it. You have three categories when it comes to financial statements and lawsuits. You have remote, possible, probable. Remote being the probability of a lawsuit going through being less than 50%. Possible, about that 50-50 threshold. Probable, greater than 50%. Uh, and it's funny because, well, maybe not funny, but the ironic thing is that like you would think under US GAAP, I've mentioned time and time again, the principle of conservatism. And yes, the principle of conservatism still applies, but the topic though with this is that we actually go, as you can see, the low estimate. Why would that be? Well, the funny thing is that like as an accountant, you wouldn't like let's imagine a funny case where executives try and do a whole bunch of earnings management. Plenty of studies that have like opined on this topic that executives do a fair amount of earnings management. Uh, I'm not here to shed light on anything new, but imagine if Gap were different. Like you went with the highest of high estimates. Uh, plenty of large companies already have like their own legal department. What's to say that someone couldn't just like arrange it so you have frivolous lawsuits, manage your earnings, modify any sort of like possible liabilities and then drop them magically and be like, oh, look at our balance sheet, it went from ugly this quarter because we thought we were going to underperform this quarter to great the next quarter. uh so that's the funny thing is that like once it's probable, possible, you would at least annotate it as far as like some sort of footnote. Probable, again, you would either definitely annotate it in a footnote, but certainly certainly as things become more clear, the footnote expands, and I'll actually use a real life example. uh, Let me just take a look at the comments here. Why, hello, Greg. Hope you are having a good evening. I wish you and yours well, and I wish you and the future viewer well. So please do consider liking, commenting, subscribing, hitting bell icon, etc., etc. Sharing this if you think anyone is interested or cares about the this type of topic. Um, so, yes, yes, we're going to be using 3M in particular, uh, but 3M specifically with their earplug lawsuit. So we can be able to take a look at things here. So good old SEC Edgar 3M Co. Um, their most recent 10K should be right here. I want to say, yep, fiscal year ended 2023. So uh, this is the year where they used earplugs as one word, which is annoying because it does change up. So we have liability litigation, combat arms, earplugs. Right here they give you a nice little timeline of sorts under the product liability litigation, and how this all came to be. Um, it's fun to note that this all arose because 3M acquired a company. Uh, I'm gonna butcher that pronunciation, but hopefully you can highlight it can be highlighted and you can see it there. Uh, Aero, spelling Aearo, and we can make of that what we will. Funny thing is that even when it comes to this company, and I'm focusing again on the earplugs. We can actually take a look at the timeline of 10Ks that the actual respirator masks and asbestos litigation is is the one that actually has taken longer. But it's good to note this just so that way we can see before a lawsuit shows up on the liability side for a balance sheet and for the income statement as an expense that uh, let's just take a look and see over the years. So again, most recent one, year end 2023, year end 2021. We can do another Control F, do it a different way, just so that way I can kind of like flex a little and show, hey, look, I've shown you that there's different work to be done here, and we can see it's a critical audit matter, and we can see that the auditors have noted the audit matter being any sort of legal proceedings and litigation related charge offs benefits. No, no, it wasn't this one. Oh, once again, product liability litigation. They provide the timeline up to what they had at that given point in time. We're going back down to end of year 2020. RO, product liability again being the dual-ended combat arms earplugs. It's funny because, like I said, they acquired it around 2023. Product was discontinued, but again, lawsuits they can take quite some time. And yeah, like I mean, yeah. Ultimately, we'll be getting to that, but furthest back that I could get to that I recall was, and we can criticize a news source all we want. Sometimes they do great work, sometimes it's pretty bad. But excuse me, July 26th, 2018. You know, common person with the right news feed or a little bit of digging around could see, hey, combat earplugs being a topic, and we can even see 3M's name being mentioned. Uh, so good to know. What's that ringing in your ears? Is it the sound of freedom or is it the sound of tinnitus? Let me double check comments here. Question not related to the topic. Have you and Andrew thought of discussing accounting on the small business side of things? Maybe not your niche, but just curious. Yes, Greg. Actually, I have thought about that. Like, I personally have thought about that for whatever it's worth. And I think I may end up exploring that a little bit. We can view that for what it's worth. I'll have to double back with Andrew, and maybe that will be a topic in the future. But what I did with the most recent live was, again, unit economics being contribution margin. The other use around contribution margin would be different product lines or different revenue streams or different geographies. Which, yes, I know small business, that sounds silly, but if someone were to have a small business and, like, I don't know, you're pretty much on the state line or around the state line of, I don't know, like Tennessee and Kentucky, like, would it be impossible for, a certain small business to say, "Oh, we get revenue streams from both. Oh, we have cost centers in both." Not impossible. Uh, oh no, I noticed that the wireless, or not the wireless, but the connection might not be great because I am plugged in. Oh, fingers crossed. My fully appreciated laptop holds up, or the router does. Either way, fingers crossed. But yeah, yeah, yeah. So when it comes to that topic, not opposed to it. And again, I want to lay down a lot of the basic building blocks that I've gotten from different accounting classes, and maybe it leads into something that can be expanded. Some of the basic building blocks will be a little bit of financial and managerial accounting, building blocks from that, to include also a little bit of corporate finance. Uh, and when you hear corporate finance, or when an outsider listening in hears corporate finance, maybe that's intimidating, but like realistically, what I'm thinking is, uh, trying to do basic projections with a project, and that becomes a whole lot more manageable. Just because it's a good idea to figure out what sort of inputs you want. Um, and you, the viewer, you as a possible entrepreneur or a small business owner, you can go from there. um, and again, like, as awful as my example was with the the unit economics one, like, maybe there's small businesses out there that would be like, oh, your numbers are stupid, but conceptually, like, I can see how it works. I can see, if I'm a restaurant owner, I need to serve X amount of dishes. Of course, a restaurant usually has far more product lines, but yeah. So yeah, like, the ultimate answer is, even if it's a no, or even if Andrew's not in, I like to think that I can provide enough building blocks for someone to get some use, no matter whomever that may be. So, anyways, back to 3M. So we have 2019. This is also where they have earplugs. Again, notice how there's some differences here, but certainly hell of a lot smaller of an entry than, as far as a footnote goes, than what the other one was. All of these have been under product liability litigation. Pretty straightforward, pretty reasonable. But if we go to this one, I think this is the first one. Doot, doot, because at least they're honest about it. They've annotated in 2018. This is what happens, um, and it's minimal, naturally, because over time things get cleared up. Uh, and this one would be 2017, and I like to put in the company name that's relevant to the earplug case. And just like I said, it's the respirator and asbestos topic that ended up dominating. But in this entire area, if we go under product liability, nothing, 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 nothing. Not a single thing about good old earplugs. So we can rightfully hassle and heckle the news all we want, but when it comes to something like this, you know th- this this to me seems like news sometimes does an all right job. Because hey, like you know the the financial statements, like no one's bothered to mention it. And believe it or not, like yeah, I'm all for skepticism and some cynicism, but um, when it comes to like the purpose of a publicly traded company and financial statements, generally speaking, they will, if anything, they will like spam as much information at you as possible to cover their rear end. And yeah, sure, we can hassle them. 2018, this is when the news dropped. You didn't give us all that much. You gave us a single paragraph. But if that's all you had to work with, because in this case or this broad topic, it was multiple cases. You had like multiple class action lawsuits, I want to say, amongst again, other lawsuits. So and in different jurisdictions too, because we're two accountants, one gap. And hell, Andrew's the one with the professional experience. I'm just giving people a bit of the academic side. Again, that probable, the remote, probable, possible choice, uh, and how it's reported. So it's fun to see things, and in this case, it was with the power of hindsight, sure, but these are all documents on an actual regulated website designed for anyone to look at, and all you had to do was just pop over 10Ks, and I went as far as I could as far as this relevant specific topic, and um, yeah, yeah, yeah. So again, interesting enough, like I said, you would think conservatism, you go with high estimate, but from an accounting perspective, when it comes to lawsuits, you don't want to show gain on something because like that just seems awkward as far as like any sort of lawsuit goes. We all get that the income statement doesn't reflect cash flows, uh, because there's a cash flow statement for that. But it would be kind of weird to show profit off of saying, "Hey, we thought we were going to get sued super hard, and we didn't." But interestingly enough, in this specific case of 3M, uh, lots of like fully grown like adult run companies, they have insurance on you know different products, different lines. So like I if I recall correctly, it was like 1.5 ish or and change like $1 billion that 3M is going to its insurance codes. But thankfully, that would be a separate like separate line item, separate accounts, and that is beyond the purview of this live stream. Uh, I thought about squeezing in a frivolous lawsuit because what the hell, I can do it. I think I can do it. Maybe I can do it. I'll yeah, I'll do it. Let me just do do riveting content. I know. I was on the fence about doing this one, so I apologize. But dude, dude, I think I will throw a link to this one, assuming I can, in YouTube, maybe. But yeah, alrighty. Do do, and there we go. Okay, cool. I'm not gonna play the video just because I don't want our stuff to get taken down. But um, yeah, so this funny moment references the wacky world of professional wrestling, as it were. And Jim Cornette is a person, quite a character, who used to work in the good old wrestling space. Turns out that this lawsuit was quite wacky indeed. So the link that I threw in the live chat, maybe I'll throw it in the comments if people really really want it. I doubt they will, but uh, this former professional wrestler named Raka Khan, or her stage name was Raka Khan, what have you. She sued this guy, Hulk Hogan, The Rock, Child Protective Services of like some state, uh, the president at the time, maybe a coworker that like Jim Cornette absolutely hates and has always been on record for hating. And yeah, so like it was just wacky. It was for like an insano reason, and like if like could you imagine if you were one of these people's accountants, or a business that she sued? Because I think she ended up like suing Home Depot also. Like, with you as a Home Depot shareholder, like having heard what I've just explained to you, been alarmed by any like no, we're pretty confident that that would be a frivolous lawsuit, and odds are, that's just good old SG&A, good old overhead, good old legal expense. So, funny times there. Um, so yeah. How far are you into your undergraduate program? I still have, I want to say, a couple semesters. I am an old student because I used to be enlisted in the military. Um, so yeah, that's why the whole -2A 1G thing up in one of the corners or down in one of the things below uh, is always the case when I am solo, because Andrew's the one with the credibility. But yeah, double major, finance and accounting, so it's relatively simple. But yeah. Hopefully you viewed that as funny, because that's an example of frivolous lawsuit that no one, like if you're a shareholder and like some raging lunatic sues you, probably don't take seriously. Anyways, on that note, stuff to look forward to. The next topic for Andrew and myself should be the joint venture accounting, with a specific example. Fingers crossed. I should. I'll be looking into contribution margin from the perspective of different revenue streams and what have you, as far as how to do that. So a little bit more managerial accounting, a little bit more building blocks, um, and maybe we can do some really really crude basic models. And yeah. Hopefully you found this one useful. Hopefully you all again liked it, and I hope to see you all on the next one.